Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 31st of October 2025. The first chart is the US dollar index futures, which did push higher this week and up to the highs of this little mini range in here. It closed at a very logical level. This bar's high, and it did push above the more recent high here. So that was a good move. Volume wasn't excessive, it was increased, it remained below the average, and that suggests that selling pressure was low and that allowed modest demand to push price higher with relative ease. So that was a pretty good move, it was a good effort, prices closed at a logical level, and the move this week has put some of the associated markets under some pressure, which you'll see. When you see this happen and you know that some of the markets that are associated with the US dollar are under pressure, those markets that show some signs of strength are the really strong markets. And the ones that capitulate and move lower with ease are the less strong markets. So let's move forward and have a look. Next chart is the E-mini S&P. This is S&P 500 index futures. You can see they attempted to move higher earlier in the week, up here, but spread narrowed considerably and price closed well off its high and closer to its low on slightly increased and slightly above average volume. This is supply coming in here. You've had supply drawn out. That's kept the spread or range relatively narrow and forced the close into the lower half of the bar. At the very best, you'll see a test for supply and response. That would be the expectation to that sort of trading. More likely, you'll see price come back and test this level for strength here. That's the more likely outcome. Price will pull back and it may test for supply at that level. And you'll get a bar in response that then looks more like this. I'm drawing daily bars in a weekly chart again, but you'll get a down bar down to this level and then an attempt to test for supply, testing this level for strength. This is effectively the previous breakout level, and just testing that level for strength. Very unlikely the market's going to accelerate higher here after drawing out supply. Almost certainly price will come back to some degree and then look for some buying support to emerge. And if buying support didn't emerge, you may push even deeper. But at this point, you'll see some sort of pullback, I expect, prior to any attempt to move higher. Next chart is the US Treasury 10-year note futures, and they also came back this week. Price was flirting with this level up here, and if there was some further strength in the market, there was expected to be an attempt to push higher. That didn't occur at all. Price pulled back this week, and I expect this level below the previous breakout level is going to get tested for strength. When the market pulls back towards a level like that, it almost acts like a magnet and it pulls price back down to it. At this point, the market's sort of hanging in midair. It hasn't closed at a logical level. The logical level is close below. It's down here. So that's where I expect price will go, even if it's just intraday or intra-week next week before price bounces. Barring that, you'd expect some sort of reversal and push back up to this level. But I expect that the level below the previous breakout line is likely to be tested for strength next week. Next chart is copper price futures. Copper price futures also felt the pressure of the strengthening US dollar this week. There was an attempt to move higher and challenge this breakout line here, but supply was obviously drawn out, selling pressure in response to the strengthening US dollar, and price pulled back, closing near its low on increased and above average volume. So you've had some supply drawn out there. I expect there'll be some relative safety found back below this breakout line here. You'll probably get some sort of testing for supply, perhaps not with quite that wide a spread in response. And perhaps you'll see more like some consolidation absorption through here in response. That'll be an attempt to stabilise and recover from the supply that was drawn out this week. If price does pull back, as expected, test for supply is found to be low, and the US dollar comes back and consolidates itself, it might offer this market some chance to move higher later in the week. But it will depend to some degree on what the US dollar is doing and how much supply continues to be drawn out of this market. Gold price futures pulled back this week, which was kind of expected. The lows of the range here were the important level to be watching. A clear break and close below that level would have been a sign of weakness. What we've noted is spread narrowed, the close was in the middle, and prices attempted to hold on to the lows of these two bars. So this is buying support emerging in the market. Volume was reduced, but it was above the average. So you've had pretty good activity in this market, and on that activity, that above average activity, the market has pulled back, but then attempted to consolidate. And there's been some defence of the lows, and buying support appears to have emerged. Now, this may knock the market sideways for a bar or two in response. I'm not sure the market will completely reverse and just head higher. Perhaps more likely, the market will bump along sideways for a bit in consolidation mode, sort of in that sort of range there, at least for a bar or two, until the activity moderates somewhat. This really high volume like this, it's dangerous for markets to attempt to ride this. This is high volatility. We want to get back to these sort of levels like this. When the market's moving like that, it's genuine trading. There's no hidden trading inside of bars. It's much more consistent and much more sustainable. So I expect the market will probably bump along sideways. There may be some up bars, but there's probably likely to be some down bars on a daily basis in response. And the market will basically go sideways, perhaps sideways to up, but not vertical up, sideways to up with a gently pressing nature towards the upside. Next chart is silver price futures, and similar to gold, they pulled back this week, and then buying support did emerge. The close well off the week's low and back adjacent to the close of the previous bar, well above this level where previous support was found here. This is actually a little stronger than the gold market to some degree. Volume was back at the average, which is what you want to see. You don't really want to see excessive volumes. You don't want to see really low volumes either. Slightly below average is okay. This was pretty much bang on the average. The market's defended the lows of the range and closed back up near its high. And this market actually looks more poised to push higher than gold does. Hopefully it's not vertical, much more sustainable if it's at a pressing nature towards the upside, sort of like that, just with a gently sloping sideways to up on average volumes, much more sustainable over a longer period. This is light crude price futures. They came back and consolidated in response to last week's up bar. So pretty good move. Prices held on to the lows of that original range here. This level here is the highs of the range below. This is a consolidation bar right up at the top half of the previous up bar, which is a relative sign of strength. That's a good move. That's what you want to see. Volume was reduced and slightly below the average, which probably reflects the fact that this was an inside bar, trading inside the range of the previous bar. The market has swept through that price level in the previous week, and anyone who wanted to trade at that price did so in the week previous. So when this market pulls back into that range this week, there should be reduced supply there, reduced activity, because the market's already traded through that range very recently. And that's what we found this week, with the volume being reduced and slightly below the average. It's exactly what you want to see. In response to that, there'll probably be a secondary test for supply early, and then perhaps an attempt to push higher if selling pressure remains modest. Into the currencies now. This is the Euro-US dollar currency pair. This market was under pressure with the strength in the US dollar. Price pulled back as expected, and it actually closed just below the previous support level here. That's not a breakdown. That's certainly threatening to break down. It's certainly not a clear break and close below the previous low. It's just a little dip below that level on increased volume, but about average volume, so that's genuine trading. And the market is threatening to break down. Your next lower level will be through here. You could extend that line through for a logical level, or here. So you can see the market has got some logical levels below which it can move down to. I expect there will be some defence of these lows through here. Whether the market will be strong enough will probably depend on how much strength there is in the US dollar. The US dollar is likely to consolidate next week, which may allow some of these markets to consolidate themselves following a bit of weakness emerging this week. See what the pound's doing. The pound, which has been weaker than the euro more recently, after being stronger for quite some time, it pulled back. It's closed at the logical level here, the lows of this bar, which is previous support. If that can't hold, your next level is through here, like this. So there'll probably be a good attempt to hold on at this level, hold on and consolidate through there. This is a clear break and close below this line and below that bar's low. So that was previous support, and it's come back and it's trading right at this level now. So that probably is a breakdown. If it's not, the only way it's going to recover is an immediate reversal like this, which is always possible, but it's certainly less likely. I would expect the market will attempt to consolidate at this level where it is right now. Japanese yen currency futures, and they're certainly threatening to break down. That's right on the level of a clear break and close below the previous support or not. It probably is, really. When that happens and there is a clear break and close below the previous support, that previous support's there, when the market attempts to recover, it nearly always fails because supply is drawn out from this level when the market comes back to it, and that supply becomes resistance, and price then turns around and moves lower. And if it breaks below that bar's low, then you've got a confirmed breakdown, and price will probably move lower down to the next logical level, which we would have to search for because there's no obvious lower level in the near background. We won't do that now. We'll just watch what happens in the near term. Aussie dollar currency futures, which had seen a little bit of a bid more recently. And you can see this market attempted to move higher this week, but with the strength in the US dollar, it failed and closed closer to its low than even the mid-bar. In response to that, and seeing this market had shown some strength more recently, you'll almost certainly see a pullback of some degree and probably a test for supply, at least initially, to see how much supply continues to be drawn out of this market. If supply does continue to be drawn out, there'll probably be a deeper pullback, And if supply is only modest, I expect this market will continue sideways, sort of in this range here, respecting this intermediate low and probably not testing the lows of the range through there. This is Bitcoin futures. Bitcoin futures didn't really trade as I anticipated this week. I thought the market may just move higher this week, and it did attempt to move higher initially like that, but then there was some supply drawn out. Price pushed all the way back like that in response to the supply before recovering modestly later in the week to close almost at mid-bar and adjacent to the previous close. I expect this will prove to be absorption. What you've effectively had is a push higher, a fade lower, and then a recovery like that over the week. And that is often seen when the market's absorbing supply, sort of like a buy the offer bar. So I'll look at that as an attempt to absorb supply at this point in time, and perhaps we'll see the attempt to push higher in response next week, and more likely up to this level. I don't think it'll move up to that level unless there was some super strong move for some reason. Much more likely, if this market's going to move higher, it'll be up to this level initially. And if there is weakness in the market, you'll more than likely see a test for supply like this over a few days, just to see how much supply is actually being drawn out of this market. There should be support found at this level and some moderate support at that bar's low there. So I expect this week's bar was some form of absorption, perhaps a little unorthodox in the position that it's in at the moment, but markets aren't always going to do what you expect. And with the push higher, fade lower, and then recovery this week, that's a real classic sign of absorption. And in response to that, you'll often see a push higher, perhaps following a test for supply. So that's what we'll look for this week. Just back to the US dollar index futures quickly. Now that we've had a look at the associated markets, you can clearly see this week's push higher and up to the highs of this range, sort of an intermediate range here. And you'll likely see some form of consolidation, at least for a brief period in response, some sort of consolidation, probably right up high in the range, in that sort of zone to start with. And then depending on how much supply is drawn out, remembering that recently not much supply has been drawn out, if supply is found to be low and buying support continues to be drawn out of this market, I won't be surprised to see a further attempt to push higher, perhaps up to this level, or if it's super strong, even up towards that level. But it did look, if you remember back here, even though a lot of the market was talking about this market pulling back and perhaps even breaking down, it just looked like this market was poised to move higher, and this bar was your telltale. And we got this push higher here in response. A couple of weeks of consolidation, testing for supply inside the range of this bar, and then a further push higher this week and a close just above that bar's high. So this is actually a good sign of strength here. You would expect some sort of consolidation and testing for supply in response. And if supply continues to be low, I expect there'll be an attempt to push higher to some degree later in the week. Okay, thanks for your time. Back again next week. See ya.